Welcome back. This is Say Good Morning Abuja. Yeah, we have a guest in the house who is going to be talking to us about foreign investment and Nigerian financial market risks and the reward. Okay, he is a chartered banker. He's also a chartered broker, a financial analyst, and a fund manager. Please join me as I welcome Idika Kalu Oma. Thank you so much for joining us. A very good morning to you.
Thank you.
Okay, we are looking at foreign investment and Nigerian financial markets. So, what role does foreign direct investment, okay, currently play in Nigerian economy?
Okay, there's no saying the fact that foreign investments would boost the economy of any local economy. I mean, it helps a lot, to boost the economic matrices of the domestic economy. Essentially, but we need to look at the components of foreign investment. There are two components. The first is foreign direct investment, and the second is foreign portfolio investment. So we should know this distinction.
Okay, so what's the difference? I know
Okay.
direct investment. The portfolio investment is now what people will be wondering.
Okay. The foreign direct investment is when you have uh, capital flows, cash flows moving from one domestic economy to the other,
Okay.
and they help encourage production in that local environment. And you find out that foreign direct investment come in the form of setting up manufacturing plants, um, exchange of resources, transfer of technology, and of course, expertise, human capital,
Okay.
into the domestic economy. So it's a plus for the domestic economy that you have foreign direct investments in such a country. It boosts the economy, there will be employment, and your GDP will definitely be on the rise.
Yeah.
It also has its own downsides, you can talk of economic sovereignty. There's a tendency that the foreigners may begin to dictate
To us.
the local economy because they hold the ace. They hold it. It's just like if you have Toyota establishing a plant in Nigeria, definitely they will control that entity and a
And
lot
will
of
not allow us to.
exactly. So that condition.
So it has the risk and the reward.
Of course,
Okay.
definitely.
Now let's look at the risk. Foreign investors.
Yes.
What would you say as a financial analyst? What would you say are some of the risks?
Oh, okay. For foreign direct investments,
Yeah.
we should be looking
Okay,
at.
sorry, you've not explained the portfolio.
I wanted to do that
Oh,
before you
please
cut
go
me.
ahead. Go ahead. We need
Okay,
to.
the foreign portfolio investment, on the other hand, is the transfer of financial resources into a local environment to acquire financial assets within the domestic environment. That comes in the form of purchase of stocks, bonds, shares, uh, exchange traded funds, mutual funds, even global depository receipts, to diversify their portfolio. So they want to stagger their portfolio. They don't want to have all their eggs in one basket. So they tend to distribute their resources to different financial centers, buying financial assets in their stock exchanges, to balance that portfolio.
Okay, so now the risk.
Okay.
What are some of the risks?
Both types of investment have risks. For the foreign direct investments, we should be looking at political stability of the country.
Security.
Yes, we should be looking at issues of security, ease of doing business in that country. We should also look at market volatility, currency volatility. These are things that can affect inflow of funds into that economy. So once they are managed, you will see a drop of foreign investments coming in. Also, for the foreign portfolio investments, you also have to look at the transaction costs. What cost is it to them to buy shares here or to do mutual funds or bonds? You know, you also have to look at the regulatory environment. Is it favorable to them? You also have to consider the liquidity position. Liquidity is the rate at which you can convert an asset to cash. So is there liquidity in the market? All right. So that's if they have bought shares, if they want to sell, can they get back their money or would they get stuck? So these are the things to consider. So market distortions too, or volatility of the market, all these things would count to either encourage or discourage investment. Yes.
Okay, let's look at the rewards
Okay, when you look at rewards, actually
on
for
our own side,
yes,
on our economy.
yes, for foreign direct investments, you change the skyline. There'll be a lot of productive activities, but you find out that those who invest in Nigeria are more interested in oil and gas. Okay, they are more interested in oil and gas. We don't find them in agriculture. We don't find them in manufacturing. A lot of things may be responsible. One, we must make sure that the domestic environment is conducive for business. We need energy, constant power. Okay, we have exactly security, good government regulations. Those things would ease of doing business. All those things can, command, attraction for them to jump into the domestic environment and do business.
Okay, for you as a financial analyst, what are some of the policies that we have that you think are not, what would I say? Should I use the word are not helping to bring in investors that we need to change or what?
So Nigeria has good policies. Must tell you that. Very good policies, but it's implementing their policies that are pretty critical. And you must understand that somebody who is bringing in money wants to make profits. So you need to address the corruption in the country. Yeah.
And they also want a conducive environment.
Exactly. There should be utilities, there should be energy, there should be, things that will make them thrive. Because we've seen a lot of companies leave the country. Why are they leaving? Where they can have steady power, where the regulatory environment is conducive, where there's minimal corruption. So these are the indices. You check that, the country will be good for it because it's creating unemployment. It's creating unemployment, and new businesses are not coming up. It's not encouraging SMEs, which are drivers for economic growth. So how many SMEs are really thriving? Yeah, so these are the issues.
Okay, briefly, maybe just 1 minute, what will be your advice to the government concerning foreign investors coming in and all that?
Generally, when foreign capital comes into a domestic economy, it boosts the economy of that of the country. Whether it's foreign direct investment or foreign portfolio investment. Foreign direct investment, those who come in with their money exercise control on the entity that they are purchasing, maybe a company. They exercise control and influence the business strategy of that company. But for foreign portfolio investments, they don't have that control. So that's why you can call them foreign indirect investments. They don't have control over the entity because you are buying things like shares, bonds, but all those things create liquidity in the environment, can boost the economy. The foreign one, you have concrete infrastructure, manufacturing concerns, that on ground that will change your economic skyline. Then for the foreign portfolio, your stock market will be bullish, will do, there will be more activity, but the issue is that whether for foreign investment or whether for foreign direct investments or foreign portfolio investments, government should encourage, create an enabling environment for the locals to also have tangible investment because we've looked at the studies have shown that one, the flow of foreign investments into the country has been declining. Okay, if you look at between 2018 to even 2022, while there were just little incremental increases, it was like 2.31 billion in 2019, 2.38 billion in 2020, 3.1 billion in 2021, but it dropped 105% in 2022, $0.9 billion. And that's not good. It tells a story that we need to do a lot to encourage foreign investments. And then the locals also should have, just like Dangote set up that refinery. These are the kind of things that we should have more of such things, irrespective of the foreign investments. Let the locals also have, because there must be a good code of conduct that will guide foreign investment in the country, so that foreign multinationals don't rip off the local environment. Okay. And somehow the profits they make, yes, there should be repatriation of profits, but it should be attenuated. There should be something that should be plowed back to the local environment.
Okay, thank you so much, sir. Yes, we need to allow foreign investors to come. Fine, we have the risk and the reward. Okay, we've been talking to a professional. You heard it from him. We've been talking to Mr. Idika Kalu. He is the MD CEO of GABS Financial Services Limited. He is a funds manager, a chartered banker, a chartered broker, and a financial analyst. No wonder he's talking the way he is, and he has also advised on what to do.